Hello again. Gosh, they're making me work today with all this walking backwards and forwards, but it is a delight to have you join us today. Before we get started, I thought maybe you could give a few words about yourself and your role within the company.
Great, and sure. Before I start with that, let me thank the organizers for having me here. The relationship for BSE and India with Dubai is a long-standing one. Many investors from Dubai are my shareholders, and many of my brokers do have business in Dubai. The relationship has always been strong, got recently highlighted by His Royal Highness, the Crown Prince of UAE, visiting India and BSE. To talk about myself in a very brief way, I've been working for the past 43 years, of which 20 plus years I've been with a stock exchange, with stock exchanges, and the remaining 20 with various banks, including Bank of America. Matthew Coder, who had the session here, was my boss's boss when I was in Bank of America. The 20 plus years in stock exchanges, I joined National Stock Exchange, other exchange in India, when it was getting formed, continued for 20 years there, and the last 2 years, I'm the MD and CEO of Bombay Stock Exchange. That's me.
Fantastic. Well-versed to answer all of the questions that we can't wait to put to you. So with that in mind, if you can begin reflecting on BSE's 150-year history, can you share how the exchange has adapted to major economic shifts in India and what key lessons have been learned from that in terms of current strategies?
All the exchanges across the globe started with first stocks coming in, then stock traders becoming stockbrokers, then becoming an exchange, and then getting regulated, and then the regulators coming in. BSE followed almost the same model, and in the process, the purpose for which a stock exchange exists have undergone a very big sea change. From being a place where people can buy and sell securities, today stock exchanges act as places where capital formation happens, liquidity creation happens, risk transfers happens, and therefore economic development. BSE has undergone this change over this 150 years. From an open cry system where it is the interest of a few people to a place where there is an anonymous order match taking care of nation's economic development. When it went up, what in the process has happened is the number of customers, the number of listed entities, the number of brokers all have undergone a change. BSE has around 5,500 listed entities, the largest in Asia for any exchange, or probably largest in the world in terms of number of listed entities, and largest in Asia and oldest in Asia. And there are 1,000 plus brokers, and there are 200 million investors trading in BSE. If an entity has to sustain for such a long time, what are the key things that has happened because of which it's sustained when I look at it? I find any organization which is able to ensure that it remains relevant continues to exist. So the one key important point which comes to me is, how do you continue to remain relevant? To continue to remain relevant, you need to address the needs of customers. So how do you find what is the gap that is in the market which you can fulfill so that you can remain relevant? And if you have to remain relevant, you have to become adaptable. And if you're ready to adapt, you have to adapt to technology. And above all this, today, stock exchanges are all listed entities. So how do you ensure governance? If you're not well governed, however big you are, you're not going to continue to exist. You will vanish. So these are some of the key lessons which I get.
What role do you envisage and envision for advanced technologies shaping the future of BSE?
It's a very interesting question that you're asking. Technology is to support a specific role that you do, right? And when I look at the role, BSE does 3 important roles. It's an operational role, first one. Second is a regulatory role. And third is a development role. Let me look at the use of technology in every one of them. In operational role, we take care of trading, clearing, settlement, risk management, reports generations. all that stuff, which is sort of more of a mundane thing. There, it is not that mundane when the market is growing. When I joined 2 years before, my order processing capability was just 1 billion orders per day. Today, in 2 years, I have a capacity of 18 billion orders processing per day. It is an 18 times growth. I've already seen 700 billion orders being processed in a single day. And the number of trades that comes for settlement, when I joined, the capability was 500 trades per second per broker. Today I am touching 25,000 trades per second per broker.
Wow.
My risk management is online, real-time, client level, portfolio based and upfront. Very unique in the world. My settlement is at a client level and T+1, which got introduced when I joined 2 years before. All this is because of technology.
Yeah.
Otherwise, in a single second, I manage 2 million orders. It's mind-boggling. It cannot happen without technology. No. That is one part of technology which becomes a backbone and you regularly enhance it. The second part of it is the development, the regulatory role. As a regulator, I regulate brokers and listed entities. Listed entities and brokers are required to submit a lot of information, which I need to process to see whether they are compliant. In this day and age, when you get 50, 60 pages of document, you don't have to go through it. We have something called as AI and LLM, which we are using, and we are planning to use it even more. And in the development area, you get into creating a lot of small social media stuff, which is helpful for investors, investor awareness creation, investor education, cautioning of investors, identifying areas of cautioning, introducing new products and new indices. All these areas, again, backbone is technology. So these are the three buckets in which we put it across, and we look at technology's use.
In terms of the implementation and adoption of that technology, how have you seen it embraced in terms of, the workforce and the business that you're working in?
Well, let me be very honest with you. Any change, there will always be a resistance at all levels. Yeah. The first level will be the people to whom you are going and asking, make this change. Yeah. And the second is to those people to whom you go and tell, adapt to this change. That resistance will always be there. And once people start seeing the benefit arising out of it, adaptability increases.
How do you see BSE's role evolving as Indian capital markets integrate more closely with global financial markets?
So there are, when we talk of global financial markets and Indian financial markets, and we are talking about an integration, we clearly give an indication that there are two different things. Yes and no. In some areas, every market will be unique. And in those areas, it should not integrate. Why? If it integrates, then the uniqueness and the USP gets lost. There are quite a few areas like that in respect of BSE. If you look at the ID level, client level settlement trading, clearing and settlement market, India is very unique. The way India looks at investor protection, it's very unique. The way the settlement happens in India on a T+1 basis at a client level, very unique. These are USPs. They should continue to exist. There will be no integration. But if you look at other areas where it should integrate, it should become better, as product diversification. Okay. You have a good number of products outside India. They're very useful products. They don't have, you don't have all of them in India. That's an important area. Ease of doing business, that could be one another area where we can make a lot of strides. In certain areas, we are very well integrated. The way in which our organizations function, the role that we perform, in that sense, we are very well aligned. What is the proof? Proof is in the pudding. 11,000 foreign portfolio investors are already enrolled and registered in India. They contribute for more than 18 to 19% of the total shareholding of the equities issued in India. The total market capitalization of India is a big number. It's more than 5 trillion US dollars, seventh largest country in the world in terms of market capitalization. 18 to 19% of it is with foreigners. Take my own case, around 14% of my shareholding is with FPIs. And my institutional shareholding of BSC is at 40% plus. So clearly in these areas, nicely it is aligned. Some areas it should maintain its USP. And there are aspirational areas where we should do something more.
With the increasing participation of retail investors from non-metropolitan areas, what new educational initiatives are you implementing to ensure that these investors are well informed and, as you mentioned before, that they're protected at the same time?
It's a very good question that you're asking. When I talk of this, I always remember this. You can take the horse to the water, you cannot make it drink. Today, Indian markets, probably one of the very few markets in the world, give all trade-related and corporate-related data free of cost to all people in the market, simultaneously without discretion, big or small. If that's all understood by everybody, if all the horses have drunk water, all the people should be very well informed. But it doesn't work that way. What many a times happen is when particularly retail investors from Tier 2 and Tier 3 and Tier 4 cities come in, do they analyze the information and invest in markets, or they invest because the neighbor says he made a lot of money by investing in a stock? The latter appears to be true in many cases. So if somebody has to invest right, he should be first of all told, trade what you understand and understand what you trade. Otherwise, don't do anything. This looks very simple, but it is not. So what we do is, we do the following. Every year we conduct around 14,000 to 15,000 investor seminars across the country where 800,000 to 1 million people participate. Small anecdotes which try to caution investors as to what they should do and what they should not do, in the form of audio-visual, interesting, family-type clippings. We make it and put it across, and in fact, 100 million viewers have come for some of those videos for us. It's a big number. Thirdly, we go to places where young investors are coming up, like colleges and some employment areas where you find young people are there. India is an old country with young people, right? 60% to 65% of the population is in the income earning age. 30% of the population is in the age of 30. It's better to catch them young. One message which I clearly tell them is product suitability. If you were to try capital market because you feel it is very interesting, you want to try equities, why don't you go in for mutual funds? We do have a mutual fund platform in that all mutual funds seamlessly you can access. Try to find a large cap, well diversified index type of mutual fund and try your hand first there. Once you develop expertise, go for other products.
How important is it to promote that financial inclusion for you?
It's very important to promote financial inclusion. Why? If you look at it, as I was just telling you, the number of investors who are very young is very huge. And most of them are coming not from Tier 1 and Tier 2, from Tier 3 and other cities. And they do have a good amount of income generated at their end now because of the diversity already that has been achieved in India. And if you don't teach them as to how they should invest, what they will do, they'll waste their money in areas of consumption which they should not do, or they'll put it in investments which they should not be doing. So financial inclusion for overall economic development is very important. Two things have helped us already. There was a scheme initiated by the current Prime Minister of India which made many of the people to open bank accounts. So all of them have bank accounts. All of them have smartphones. All trading capabilities and all information are available in smartphones. It's at just tip of your finger, you'll be able to trade. And we have something called as unified payment infrastructure, which at the touch of a button can transfer money from one person to the other with lot of ease. Let's assume you have a bank account in a bank A and I have in bank B. I can transfer money to you and you can utilize it even before the money is exchanged between bank A and bank B. That's the beauty of it. So with all this, we are going ahead in a big way in financial inclusion. More and more of it has to happen for economic development.
What measures is Bombay Stock Exchange taking to make India a more attractive destination for foreign investment? You know, how do you address potential challenges in this regards?
So there are a few areas where FPIs will generally face challenges. Some of them will be possible to be addressed by us directly, some by our regulators. The first is about the information non-availability challenge. If people do not know about the destination, they cannot come in. We take care of it by way of significantly large number of shows, road shows. So that addresses a lot. In any congregation where we feel foreign investors would be there, we are present to educate them about Indian markets. Based on our feedback and based on the feedback directly taken from these people by the regulators, today the KYC norms and the registration norms are all eased out a lot. Thanks to COVID, many of them have become digital. That is another area which we have taken care of. The third area is what they would like to have is product diversity, which we bring in. The fourth important area where we are doing something which we think will fructify soon is this. There are two major exchanges in India. Best price execution is a very important requirement for foreigners. That's not there in full at this point of time. There is a concept called common contract note, which is not there in India at this point of time. That is, if you are a foreign institution, when you place order to your broker, you are not going to tell him which exchange he should trade. What you want is the best price. So he should source it from any exchange where it is best price but still give you only a single contract note, the single price. That is not there. We are working on it. Probably June end, that should be in place. These are some of the things.
We've got a couple of minutes left on the clock, but are there any strategic partnerships or collaborations with international financial institutions that BSE is, pursuing in terms of the future?
Let me tell you, whatever is pursuing, how much I will be able to tell, I don't know. What we have already achieved, let me tell you, that works a lot for us. The trading infrastructure that we have, the backbone on which I am so prolifically telling you that I am managing 18 billion order messages per day, that was taken by us from Deutsche Börse. It's the T7 architecture of Eurex that we are using. We have acclimatized it. We are doing significantly large number of orders compared to any other exchange because Indian markets are different. So this is one example. There are multiple areas where with multiple index providers, multiple software providers, and multiple hardware providers, we do have collaboration at multilateral levels for the day-to-day operations and the products that we manage. We also intend to intensify such collaborations wherever it is mutually beneficial. After all, today, it's not any one country's one exchange competing with another exchange in that country. It's a global market. An investor sitting in Dubai need not have to trade only Dubai markets. He trades all the markets. The competition is universal. It's a global market. So how do you ensure that people trade with you? In my opinion, only one thing can ensure. That is customer delight. How do we ensure that? That would be our goal.
Mr. Ramamurthy, what a pleasure to have you join us today. Ladies and gentlemen, please put your hands together. That's all we have time for, unfortunately, today.
Thank you.